Hey, what's up, traders? Welcome back to Forex Gym. My name is George, and today this is Saturday, and we got weekly Forex analysis for the following week, which is from 4th of May to 8th of May. This is a potential swing trading opportunities for the following week, and in this video I'm going to be analyzing US dollar against Canada, followed by US dollar against Japanese yen. I'm going to be uploading a few more videos today as well as a couple of more tomorrow. It's going to be same as weekly forex analysis, but on the different currency pairs, of course. So stay tuned and make sure to hit that subscribe, because I'm uploading videos every day related to anything related to trading, as well as daily forex analysis, weekly forex analysis, and a bunch of other content. So let's jump into the US dollar against Canada and start analyzing the charts. So what I normally do, if you're new to this channel, I start from the higher time frames, which in this case is a monthly time frame, and drill down to the shorter time frames and looking for the potential opportunities for the entry, and discuss the entries, stop losses, as well as targets, and what to be aware of in terms of maybe the candles if the trade is not completely set it up yet, and all sort of stuff. So I'm going to start with this monthly time frame and bring up a pen. It will be easier and discuss, and looks pretty kind of similar what I said for the last week, as in terms of the candle for the 2 months ago, the price came up to high up here, but it failed to take out this high, this spike high up here, and then we had this immediate reaction towards downside, and we left this a week. It's kind of half week and a half body in here, and also for the last month we closed it as sort of an inverted hammer in here, this red candle, and for today the price is kind of starting to start to push higher as of for this beginning of the early month. Let me get rid of this one. So let's go to the short time frames. There we're gonna have a more clearer picture once we drill down to the daily time frame. So let me explain what's going on in the weekly time frame up here. So this is this week, what we've seen on a monthly time frame, this down candle. This is a weekly time frame, and the price followed this aggressive Russian downside, and then since then it's pretty much going up and down, and particularly pay attention for the last 2 weeks candle. We closed it as like an inverted hammer in here, so last 2 weeks, and for this week we closed as sort of doji, or the hammer. It's more like a doji of this candle. It's more like a doji. Now let's drill down to the daily time frame, and we're gonna have a better view of what's going on. So it looks better and a bit more clearer than on the higher time frames. So we can see in here that it's just reflecting what happened on a monthly time frame. We can see that even though we have a trend strong towards upside, now it's coming down to, it's making its way down slowly. We have this also this nice trend line up here, and we've seen that the price made it down to this low, and then it's kind of went up and gravitated toward to this low, and kind of breaking it on the, it broke this low down here. We can see down here it's broken this low, and then it went all the way up, tested these highs up here. Oops, tested these highs up here. We can see this this high, so it came up and tested these highs, and then we had the reaction towards downside. The price came down and tested these lows here. I don't think it has taken out. Has it taken out? I think marginally. It marginally has taken out this low, this spike low down here. This spike low is slightly lower than this this low, just about marginally, and then we had this immediate reaction towards upside. So if there are any orders down here, limit orders or the stop orders, the price already triggered them. That's why we had this reaction towards upside. So yesterday and day before, particularly yesterday, we had this nice reaction, and this this is a daily Friday candle. It's looking pretty strong, bullish towards upside. But because we have, excuse me, because we have quite a bit of resistance coming up, so the price coming up to this, almost going to these highs in here, which is the next resistance area, and we also have this trend line in here, which makes it even stronger. So my view is that the bigger view as of the monthly time frame goes, that I still see that the price want to come up and potentially to take out of this high here, where we got this spike, and also when we saw the monthly time frame, there was a spike high in here. So potentially maybe price wants to come up and take out this this spike high, which is quite far away. It's around 146.70 zone, so it is fairly big distance. But I do want to see first a confirmation that the price does want to come up and it's not just playing around before continues to fall towards downside. So that's why you want to see the reason, because the target's going to be too far. I do want to see a bit more confirmation, and what I'm waiting for the price to break these highs up here. So as of this instance, it can do it for the next week. So first, our resistance is up to these highs. The reason why we have this high, we got this low here, and also we got this spike up here, as well as the trend line. So that makes a decent resistance up there. So it's pretty close to this one. So I don't want to see the break of that, and the second resistance will be up to this high at 142.10 area. We got these highs and a lot of cluster of open and closes with the spikes, and also we got this low here, which makes it even stronger resistance. So I don't want to see the price coming up around maybe 142.90 or 14300 and closing strongly. And what I mean by closing strongly, I mean by that the candle of the way the candle is going to close. If it closes something like this one, then I will be very happy to take the trade on a retracement. So I want to see a strong bullish candle to close. Then we're going to wait for the retracement. So for instance, let's discuss if the price comes up at 14300 and closing nicely, then I will be looking for the retracement down to next potential would be down to this return of these highs, which is at 142.20 zone, roughly about 80 pip or 70-80 pip retracement. Let's get rid of that. So will be a return of these highs up here, and then the target is target is quite far away. I would say the first target, we can target these highs in here, not just the spikes. So 145.15 is going to be the first target, and the second target would be, we would expect for the price to take out this spike high here, which is roughly at 146.70 zone. So we got these two potential targets. Now let's discuss the stop losses. So if the price comes up and closes strongly bullish, then retraces down to let's call it 142.15 zone, then we would be looking 142.15, 140, probably 141.15. We would be looking about 100 pip stop loss. I know it can be too wide for some traders, but we are looking quite far away targets. We're looking at least a 300 pip target in here. So as of the risk reward goes, if we take 100 pip stop loss with a 300 pip gain, we were looking at 1 to 3 as of the first target. And if you want to leave the trade and run it to this spike high, then the risk reward is going to be even greater. But don't forget that you need to wait until the price breaks this zone, and also a nice close up to this zone. So if it closes something like something like this one, then I will be happy to take the trade on the retracement. Probably not gonna do it for maybe Tuesday or Wednesday. Might do if the price decides to come up and break this zone. Then it's gonna be more likely on Tuesday or Wednesday. And we continue with the US dollar against Japanese yen from the monthly time frame. So each candle represents a month of candle, so it's a month of data in each candles, and I'm just gonna walk you through a bit for what's been happening. And we see for the last couple of months, and this is since January, we have also this monthly trend line in here, and price had tested this trend line already multiple times. It's been trying to break this candle for quite a long time now, and we can see tested in here and tested in here as well as here, and it came up here and kind of air kissed it, but each of the attempt has failed to break this trend line. So it's multiple tests in here then, and each of them has failed, and now it looks like it wants to kind of continue probably towards downside. But on the other hand, because of the nature of the candles, if we pay attention, we have indecision candles. That's what they are called, the hammer, inverted hammer. So we have this like inverted hammer candles, spinning top, and followed by inverted hammer again. So but the way it does look on this chart, so it looks like more of it wants to go more downside than upside. The only thing is the price, when we had this spike, price came down and tested these lows down here. There's a good chance the price gonna probably come back and retest and potentially take out maybe this high or even down to this low. So this low or down this low. There could a good chance that price probably gonna gravitate towards that low, because it was you might have built up a lot of orders. So let's drill down to the short time frame and see what we have on the weekly time frame. So this is on a monthly time frame. It looks like the price has broken this trend line, but when it comes to the monthly time frame, it has not broken the trend line. So in here, the price is so it came down and took out this low in here, but it did not really have much of a big reaction. If we look at it, yeah, price is taken out, but it did not really have a big reaction. It only left this week. This is a weekly time frame, and it's this body in here. So normally when the price takes out weekly or monthly high or low, it does have a reaction if it's a significant, even though this is we have this low here, and also as well as this low, I would have expect maybe a bit more reaction. However, it did not really create much. So let's drill down to the shorter time frame, a daily time frame. But before we do that, there's a good chance that the price, okay, we're going to return to this one as of the, because we're going to address it, we're going to use that as the targets. So let's go to the daily time frame first, and we can see in here that the price looks like that it wants to roll back over towards downside, and we also have this trend line in play. It's on the daily time frame trend line. Yeah, we have a trend line in play in here as well. There's a good chance that the price will continue to fall, and actually the first could be these areas of the first potential towards downside. So what I want to see from this one, I do want to see the price coming down. So we are sitting at this support area in here as well as this weekly. So this is these highs, same as on the weekly lows which I showed earlier. So it's on this area, the price tested it, and now it has this reaction, which was I think it was a Thursday's candle, this up bar, and followed by the down bar on Friday. I do want to see the price coming down a bit more and breaking this low down here. So if the price comes down and breaks it, roughly about looking 106.10, and then when the candle closes nicely bearish, then we're going to look for the retracement towards upside. So we need probably another 80 pips to get the price coming down. It's around 106.10. Nice close, and then a return to the most likely going to be returned to this area here, which is about 106.60. So the reason why we got these loads of highs, low price section, and also this lows, and as well as there will be also these lows down here. So price coming down at 106.10, nice close, and then retracement at 106.60, which is around 50 pip retracement, and we're talking about swing trades in here, so that's completely justifiable to for the 60 pip retracement. So let's assume that the price came up at 106.60, and for the stop losses we're gonna look for about 106.60. For the stop loss we would be looking about 60 pips stop loss. 60 pips stop loss. We're going to position our stop losses around this area, so we're going to be above this this cluster of highs. So if the price decides to come up that high and maybe taking out this spike high here, then we would be safe, because our stop loss is gonna be higher than that. So that should save us for price to getting stopped out. 104.70 is gonna be our target. So 104.70 is of the targets. The entry is at 106.60 if the price does the moves, I discussed on the daily time frame. So the price has to come down first and break this this level down here, and then a return to this level again, which is at 106.60. That's entry with a 60 pip stop loss, and we're gonna run it down to 104.70 as of our target. Okay guys, this was a weekly forex analysis for US dollar Canada and US dollar against Japanese yen from 4th of May to 8th of May. If you're new to the channel, make sure you hit the subscribe. I upload videos about trading every single day. As well as, if you like this video, make sure to hit that like. It really helps me to support, and also to motivate me to make and produce better content for you guys. Have a great weekend, and I will see you guys in my next video.